Should inheritance tax be abolished in 2021? I'm reacting in this video to an article in the Daily Express today. Britons feel disgusting tax should be abolished as repayments soar. Let's dive in and find out what Express readers really think about inheritance tax. Before I go any further, a quick introduction if you're new to my videos. I'm Martin Bamford, a chartered financial planner, personal finance YouTuber and money author. On this channel, you're going to find videos about personal finance, investing and happiness. If you want to become wealthier and happier, please do click on that little red subscribe button to join our subscriber community today. It's completely free and you'll never miss an episode. I'll pop a link to this Express article in the description. Helpfully, it starts off by defining inheritance tax. They explain that it's a tax payable on a person's estate after they have passed away. I was told off once by a client for referring to her estate, and she said to me, "I don't have an estate, I have a house," which is a fair point. When financial planners talk about estate planning, we should probably be talking about inheritance tax planning. It's much more accessible language. And that inheritance tax is paid, as the Express says, after the person has passed away. After they've died. We can say died, right? Those left behind are responsible for dealing with the bill. Well, yes, inheritance tax is a tax paid by your children or by your grandchildren or by anyone else you leave money and other assets behind for. That feature of the tax can cause a few issues, because what happens when the assets left behind are not cash but property? And inheritance tax still needs to be paid in cash on the value of that property. The kids either need to raise the cash to pay the taxman by borrowing money from their bank or selling the property, which in many cases they want to keep. They want to keep that property in the family. The Express goes on to explain that inheritance tax is levied at 40% and it's charged above a particular threshold. That's what we call the nil rate band. It's currently at £325,000 per individual. Just for fun, the Express has polled its readers to find out what they think about inheritance tax, or death duty as it's sometimes called. Apparently, according to this poll, the general attitude towards inheritance tax appears to be waning. They asked readers, "Are you happy with the current rate of inheritance tax?" What a question. I guess you're not going to get too many people saying, "Yeah, I love the thought of my kids having to hand over 40% of the value of my property to HMRC when I pop my clogs." But out of the 234 people who answered this poll, I don't think 234 is statistically significant, by the way, a solid majority thought that the current rate of inheritance tax was too high. 82% of the 234 readers who clicked on this online poll expressed dissatisfaction with the rate of tax and thought it should be lowered. That does make you wonder a bit about the other 18%. Are those 42 people happy with the current rate of inheritance tax? Maybe they want to pay more. The article goes on to tell us, it goes on to say that 13% of those asked thought that the current inheritance tax rate was appropriate. And then an additional 5% thought the taxman should charge people more for inheritance tax, more than that current rate of 40%. One express.co.uk reader said, IHT is an iniquitous tax and is a tax on already taxed earnings and so should be abolished. I'm guessing this Express reader got a word of the day calendar for Christmas. I had to look up iniquitous. It means grossly unfair and morally wrong. It's a good word. They said the government should cut unnecessary spending before raising taxes. Another reader said probably the most disgusting money-grabbing scheme ever invented by the government. Pay taxes all your life and then pay tax to die. Wow, strong opinions there. Why did the Express get its readers all riled up about inheritance tax? It's a bit of a leap from their usual front page fodder of Princess Diana or pensions, although possibly not that far from pensions, I guess. Their survey comes after a recent Freedom of Information request found out that HM Revenue and Customs made 9,864 IHT repayments in the 2019-2020 tax year. Yes, the taxman paid people inheritance tax back during that last tax year. These repayments happen for a variety of reasons, including when assets fall in value, which of course is one consequence of challenging economic times like those we're currently living through. The number of repayments in the 2019-2020 tax year was up 66% on the 5,949 repayments in the previous tax year. The Express refers in its article to a little-known rule that can mean that refunds on losses are available, which then leads to these inheritance tax refunds. And when there is market turmoil, it's reasonable to expect more losses and more of these refunds to take place. In an environment where the Treasury needs to raise more tax revenue to pay off its coronavirus debts, I think it's incredibly unlikely that inheritance tax will be reduced or even abolished. In fact, if anything, the rate of tax and the available allowances may go up effectively in the future. But that said, former Chancellor Roy Jenkins, who's the Labour Chancellor, was spot on when he said inheritance tax is a voluntary levy paid by those who distrust their heirs more than they dislike the inland revenue. And he said that because if you're prepared to give money or assets away during your lifetime with no strings attached, and then you go on to survive for at least 7 years afterwards after making that gift, there is no inheritance tax to pay. The starting point for any inheritance tax planning to make it truly a voluntary tax is to understand your current liability, or at least how much your children would pay in inheritance tax if you died, say, tomorrow. With that calculation in hand, you can then start thinking about mitigation techniques, finding that right balance between effectiveness, paying less tax, and continued control, being able to access your money. Because there is always a balance to be struck when it comes to inheritance tax planning. It's very simple to wipe out your entire inheritance tax bill by giving everything you own away today, right now. Just give it away. But then you lose control over that wealth because you've made those gifts with no strings attached. You can't pretend to give money away to your children or grandchildren for the purpose of inheritance tax planning, but continue to enjoy its benefit. That doesn't work. The tax man takes a very, very dim view of that, and that will actually end up charging your children the inheritance tax anyway. Inheritance tax is a reasonably complex area of tax planning, especially if you've got assets exceeding that nil rate band threshold, £325,000, or if you own a variety of things like property, investments, businesses, etc. Seek professional advice to avoid expensive mistakes. Let me repeat that question then from the Express. Are you happy with the current rate of inheritance tax? Let me know in the comments. If you found this video helpful, there's one super quick thing you can do right this second to support my channel. Smash the like button. And if you fancy being an even bigger supporter, why not share this video with your friends, with your social networks, anyone you think would get something out of watching it. Press that share button now. Thank you for watching this video. Until next time, I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.